Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I would look at DAX, S&P 500, Aussie, Euro versus pound, and also dollar versus Mexican peso. So stocks are doing quite well. We are in the risk on mode especially since last week, when the inflation in the US finally came to the downside. So this appears to be very supportive for stock market, because after all there are speculations that Fed could be approaching the end of the hiking cycles. So we are seeing a pretty aggressive bounce. In fact, we have seen very aggressive extensions to the upside on European markets, which is quite interesting if we consider that there were warnings about the energy crisis here in Europe, and then you have these Ukraine-Russian tensions still in place. So actually, German DAX is still outperforming the S&P 500, and looks like that now when the S&P 500 also turned to the upside, and other markets as well, other indexes, I mean, of course, this could have positive impact on German DAX. So looking at German DAX, we are seeing a very strong breakout here above that trend line. Looks like that we could be headed towards this wave B swing resistance levels, looking at the early summer levels. So even the second alternate count, which shows the flat correction here for wave B, so it's a 3-3-5 pattern, and even this 5-wave move then for a wave C should take us into this area. So I think that there can be room for more gains, especially if you also look at the 4-hour time frame. We know that very strong moves without overlaps, these are impulses. And if you look closely here, well, that's not a completed 5-wave movement yet. So I think that we are just in the middle of a higher degree recovery, so be aware of more gains. Now there can be some supports, obviously a little bit lower, since we've seen this move very extended. I think that this can be a way for now, possibly already in progress, or maybe after retest of the highs here, but eventually I think that this wave 4 will be or already is in the game, so watch out for potential lower pullbacks here, but eventually obviously we should stay in uptrend after any dips. Now let's take a look also on the S&P 500. So we are currently still trading in this downward channel, but looks like that we can be retesting the upper trend line. So either we are going to then see a breakout that will confirm that the risk on is back, or maybe we will fail to break and we will come back to the downside. And if we see break or drop back towards 3,750, I think that new lows will come actually. So in such case, I would pay attention to the second wave count, which shows that we are in a WXY complex correction. Okay, ABC, X, and another ABC. So markets, whenever you are tracking a counter-trend movement, can be in 3 or 7 swings, and these 7 swings could be then in the cards for another drop towards new lows. If we see this level, as I said, 3,750 or so, then I think that this could be the case. Why 3,750? Let me take a look here. Actually, it's a little bit higher. Okay, it's 3,800 actually. So that's the level where current intraday bullish impulse would be invalidated. Okay, so if I think that market is a new impulse trading up from that Thursday low, then this should be a 5-wave ongoing movement, meaning that when this wave 4 will take place, probably already in play, should not see a move into the territory of a wave 1. Okay, or wave 2 if you want, because that was the starting point of wave 2. So as long as we are above that level, I think that this trend could remain in the cards, and I'm looking for this equality target here around 4,100, and then you have this very strong level, resistance one, back from mid of September. So I think that there is room for more gains here, and that's where actually we will see a decision point at this major trend line from a daily chart. So for now, I think that even if just short-term risk on is here, it could potentially bring higher prices on majors versus the US dollar. So before we go to the to Aussie dollar and Euro dollar charts, well, I want to look at these correlations here, notice that this was actually the CPI print, and notice that we have Aussie back from last week when markets turned to the upside. We have Aussie, one of the strongest, almost 6% so far. Then you have Kiwi, and then you have Japanese yen. And Japanese yen somehow is overextended. You have on the one side you have this intervention, on the other side you have Bank of Japan policy. So these are two contrarian signals, and then you have risk on mode. So I'm not really short in a risk on mode if I would be willing to buy Japanese yen. So I would rather stick with Aussie and Kiwi, maybe even CAT, but notice that CAT is not that strong. So that's why my attention will be on Aussie and Kiwi. And then you have Euro just behind the Japanese yen. So my attention probably will be on Aussie, on pullbacks. And if you look here closely, well, firstly on a higher degree time frame charts, notice that we came very nicely back towards this trend line, trying to reverse higher. And even from a candlestick perspective, let me switch to monthly. From a candlestick perspective, you can also see that this appears to be like a very nice potential morning star formation. Okay, so of course we have to see where current month will close, okay, because obviously it's still 2 weeks away. But if Aussie will be managed to stay up here at the current levels or even higher, I think that we are going much higher in weeks and months ahead. And looking now with this idea, looking at or zooming it in a little bit, looking at the 4-hour time frame, well, that's a very nice first leg, not that strong, but usually the first leg when market changes the direction will be much slower than the following legs in the same direction. So this was a very slow move. Then you had a pullback, very nice one, and very strong move. You can see that this one has now already crossed the equality level of first leg here. Okay, so in my opinion, when this occurs, we can say that probably we can be already trading in a wave 3. But even if it's going to be extended wave C, meaning of a whole corrective rise, well, still this wave C should be made by 5 subwaves. And if you look closely here, that's not a 5-wave movement yet. Okay, so you're now perfectly trading around 161.8% of wave 1 measured from end of a wave 2. That's a perfect dip target. So watch out for a wave 4 dip and then a new leg to the upside. So I'm watching this one very closely. I want to see if we can get back to 666 level. Well, not really interesting price number, but okay, still, I think that this is a very nice technical potential support here. So I will be looking for potentially long ideas if we are going to consolidate while the market is holding above this 65.50 area. Now let's take a look also on the euro. Now euro is also making some very nice aggressive turning points here. Notice that there's a very nice strong move to the upside happening since start of the month. So I think that there is a new impulse simply because that's a very strong move. So I want to look this as an impulse rather than a corrective leg up from that November 3rd low. Impulses again are the 5-wave patterns, and normally you will see a wave for pulling back for 38.2%. So let me take a look, where is this 38.2%? Okay, so the 38.2% you can see is here around 102.70. So that was also very nice support. You have the previous highs here. So I think that that's a very nice and key level for potential bounce here. But I want to see wave for to be a little bit more complex. If we'll see straight move to a new highs, obviously then I'll just miss this trade. Okay, now let's take a look also on the euro pound. So the inflation, as you know, in the UK is getting worse, and probably they should do more with hikes. But as I know, Bank of England was one of the first banks that actually had this recession in mind. So maybe they would not be so aggressive, and I think that the ECB could do much more on this path, and if that would be the case, then euro pound could rise further. Now looking firstly here on this higher degree charts, actually let me switch to this monthly. You can see that I'm tracking just a clear cycle analysis, and looks like that we are in this bullish path, but we touch the upper side of the range, so I'm afraid that we will continue just sideways here. So it's a no man's land regarding the higher degree time frames. So you will have to be very nimble on the smaller time frames. But what I like about the smaller time frame here, about the recent price action, is that this rise after this very nice pullback here, this rise from October lows was in very nice 5 waves. Okay, so this 5-wave movement suggests that bottom has been formed, even if just temporary. These are impulses, and you will always want to see a continuation into the same direction after a 3-wave setback, because markets will move in one direction with 5 waves, then slow down for a 3 waves, and then another 5-wave movement will probably occur. So I'm tracking now this part of a correction, a 3-wave movement against the previous 5-wave rise. So because markets needs a pause, needs a slowdown. So I'm tracking this ABC pullback. We have came pretty close here, not really breaking this support. So maybe wave B could be a little bit more complex, possibly like a triangle or something. But watch out this 61.8%. That's a perfect level from where we could rally if we obviously clear some stops here below waves 4 and wave A. I think that there are plenty of them. So watch out for this potential price action. Now, if you want some more confirmation, well, whenever you are observing potential support, wait on the market to rise away from the support so that support will be respected. If that would be the case, and you will see later on bounce from that area, that's when you could be looking for potential long ideas. If on the other hand you are more aggressive and want to belong in that area, then obviously you will have to keep in mind that invalidation level is still far away at these levels here from start of from late of October. Okay, and now finally let's take a look on dollar Mexican peso. Now this one has provided pretty nice breakdown. We've been looking for this breakdown for a while, and looks like the triangle is finished. So what we can look for now is obviously a retest, or all the price action could reverse all the way back to these pandemic levels here from February 2020. So watch out for this to happen in the next few weeks, I believe. However, nothing will move in straight line. There could be some pullbacks coming if that's a small wedge right now going on. Very nice support for a wave 3 is obviously again 161.8, so 19.13 level, that's the area where we could slow down a little bit, then rally back towards this trendline resistance, which should stay in place for this downtrend to resume. Okay, so watch out for potential more weakness after any rally here. Traders, thank you very much for your attention. Hope that you enjoyed this video. Talk to you soon. Bye.